90% of traders lose reversal trades because they make one simple mistake. They enter too early, they see a strong support or resistance level and assume the market has to reverse. But the best traders do not predict reversal, they wait for the market to prove that the reversal is actually happening. So in this video, I show you the exact confirmation process I use to avoid fake reversal and enter higher probability trades. Let's look at what most traders do. Imagine the market has been moving up strongly for several hours or several days. Eventually, the price reaches a resistance level. Many traders see this level and immediately enter a sell position. Their thinking is this level worked before, so it has to work again. But the market does not care about what we think. Sometimes price will break the resistance, continue higher, and stop out everyone who entered too early. The exact same thing happens at support. Now, what do I do differently? I wait for the market to show me that the trend is actually losing strength. The first thing I need is a strong support or resistance level, but not every level is valid. For a high probability reversal, I want to see at least 3 clear touches. The more times the market respects a level, the stronger that level becomes. However, I still do not enter. This is where most traders make the mistake. For a sell trade, I want to see buyers struggling to push the price. Then I look for my final confirmation, a trend line breakout. But again, not every trend line is valid. I need at least 3 touch points. As you can see here, we have 1, 2, and 3. If the market respects that trend line multiple times, the breakout becomes much more meaningful. Only when a candle breaks and closes beyond that trend line, I do consider entering the trade. That is the difference between predicting a reversal and confirming a reversal. Now let me show you a real trade I already took. In this trade, the market reached a major support level. As you can see, this support had multiple touches. 1, 2, and 3, making it a strong area. Most traders would enter a buy position right here. And this is where they make the mistake. At this point, the market has still making lower lows and lower highs. The sellers were still in control. There was no reason to assume the downtrend was over. Instead of entering early, I waited. The market started showing signs of reversal. I draw my trend line following the downward. And as you can see, we had a clear 3 touches on the trend line. 1, 2, and 3, making it a high probability setup. Then something important happened. The candle broke above the trend line and closed above it. That was my confirmation that sellers were losing control. Only then did I enter the buy trade. My stop loss was placed below the recent swing low, and my take profit was placed at the next major resistance level. As you can see, the market moved upward and reached the target. The difference was not the support level, the difference was patience. So why do most traders make this mistake? The answer is fair. They are afraid of missing the move. They think, if I wait, the market will leave without me. But this mindset is what causes many losses. Professional traders understand something very important. Missing a trade is better than taking a bad trade. There will be always another opportunity. The market opens every day. Your job is not to trade every setup. Your job is to trade the best setups. After years of trading reverses, I realized that patience is the biggest advantage a trader can have. The market will always give you opportunities, but only traders who wait for the confirmation will constantly find the highest probability setups. So remember these 3 rules. First, find a strong support or resistance level with at least 3 touches. Second, wait for the market to show us signs of reversal. Third, wait for a valid trend line with at least 3 touches to break and for the candle to close beyond it. Do not try to predict the reversal, let the market prove it to you. If this video helped you, make sure to subscribe because we'll continue sharing real trades, advanced techniques and lessons I learned from years of trading. Thank you for watching and I see you in the next video.